You may say, Ray, I'm not going to own the house 25 years. I'm not going to pay it off. Cool. Tons of my fellow service members use the VA loan. So I'm very excited to actually educate you on everything you need to know about VA loans. If you're looking to buy and are a veteran or know a veteran, this is a loan program for you that will save you a lot of money. I'm going to give you a real case study of just how much money that can save for you if you use a VA loan when buying a home. Let's talk about the things we're going to cover today. Ray from Mortgage Maestro Group. And along the way, if you like educational content that's delivered authentically, then you'll want to subscribe to this channel so that you can receive more education about growing wealth through real estate. Today, we're going to talk about who's eligible for the VA home loan, key benefits of that VA home loan, some important considerations for qualifying, some misconceptions, little known facts, and a real life comparison of a $650,000 house VA loan compared to a conventional loan. So first, let's talk about who is eligible. So for all of those active duty service members, once you have 90 days of continuous service, you're going to be eligible. Veterans, we know that you have to have minimum service requirements that do apply, which is separate and different than if you're National Guard or Reserve. So National Guard or Reserve, so that is, you're talking about 6 years of 6 years of service or having been activated for 90 days as it relates to that. So like someone like me who was in the active reserves, I was active duty Navy. So while my enlistment was shorter, because I was activated for more than 90 days, I have been able to use the VA home loan for my family to buy our last home. And then this one actually is really cool. I was blessed to help a surviving spouse. That's pretty, I still get shivers on that one. But if a spouse was killed in action, missing in action, or has service-connected death, then that surviving spouse can be eligible to use the VA loan. Let's transition and talk about some of the key benefits of the VA loan. You may already know 100% financing is available to you, which can be great because compared to, say, another loan program, this can allow you to save that cash for investments, home improvements, or other uses of that money for you. Now, to be clear on this, there is not a loan limit. So you could buy your dream home using a VA loan and not necessarily put down cash. I'm going to share with you, though, everyone who is required to pay the funding fee, it is allowed to be financed. However, if you do not have 10% disability, you will be required to pay the funding fee. And that's where you want to get educated on. If you have the capital, does putting, say, 5 to 10% down make sense? The reason I bring this up to you is you're going to save a substantial amount of money as it relates to that funding fee. So especially if you're buying a more expensive home, have your loan officer educate you about the savings, because you know you can't do a jumbo loan with 5% down. But if you do a jumbo and then do VA, put 5 to 10% down, you're going to save a substantial amount of that funding fee from being financed. And if you have that 10% disability, there's no funding fee. This is a pretty amazing tool for my veterans out there who have that disability rating. There is no mortgage insurance. So your loan is your loan. Your interest rate is going to be lower than conventional and competitive in line with FHA, possibly lower depending on what's going on right at that time. But those government loans do have lower interest rates. There are more flexibilities with qualifications as it relates to past credit history. So if you had some collections or judgments or bankruptcies, VA looks at it a little different than how Fannie Mae is going to look at those types of credit instances. And so that can certainly help you sooner. As an example, bankruptcy, Fannie Mae, you're out 4 years. So with VA, you're going to get back in there much sooner, and they aren't going to necessarily require you to pay off those collections. In addition to that, student loans. This is something you should be aware of because student loans are a murky subject for qualifying for a home loan. Fannie Mae commission loans has a way to do it. FHA has a way to do it, and VA. VA is actually pretty straightforward. If your payment is not reporting on the credit report, deferred, forbearance, otherwise, they're going to use basically the amount divided by 240 months. It's a much lower payment than, say, even how FHA or conventional loan is going to qualify those student loan payments, which can help you for qualifying for the VA loan. Now, I will say this, one thing that's really cool, and I have another video on this about house hacking. if you're a veteran, one of the most underutilized ways to use a VA loan, especially in your first home, before you say you're married or before you have kids or even with kids, you can buy a 2 to 4 unit. If you occupy one of those units, then you're actually able to basically house hack. And when you put back the rent you're going to get from those other tenants, and then later, if you convert it to a full-fledged rental, you don't have to refinance out of that VA loan. You may choose to free it up for the next property. But depending on where you move, spoiler, you can have more than one VA loan. So let's talk about some important qualification considerations. You or the lender can obtain the certificate of eligibility. This is required, but also we're going to want your DD-214. And if you're active duty, what's called a statement of service. So keep in mind, the VA looks more at residual income than debt ratios. Residual income is really what real life money is all about. And if you have children and they are in daycare, VA actually will have a consideration for the daycare costs. Important tip though, if you have a family member that's going to take care of those kiddos or a spouse who is staying at home, that can be excluded from the calculations because it's all about residual income, not so much about debt ratios. And that's an important thing. The residual income varies by region and by family size. So keep that in mind and bring this up to your loan officer. And if you have childcare costs, bring that up as well. They should ask you that question. And therefore, we've even seen loans with higher debt ratios. We had one veteran who had a 65% debt ratio, but because the markers were met for things like residual income, then that allowed that person to get their home loan approved and move forward and own that property. There are considerations to think about that are misconceptions. The first and foremost, I probably hear a lot about, and you can see it on that Reddit thread, VA loans take forever to close. This is false. The reason it is false is it's just no different than any other loan. Part of it depends on how good your lender is. The other part of it depends how responsive you are. Another thing that comes up is you can only use a VA loan once, or there's a cap to how much you can borrow. These things are also not true, so get educated by your lender. Another thing that comes up is, again, VA is only eligible for single-family homes. No, if a condo is on the approved list, it can be used on a VA loan, and VA condos, once approved, are always approved. They don't have to go back through that process that FHA loans do or condos do. Therefore, once a condo is approved, typically it's going to stay approved for VA future use on VA loans. And this one sticks out the most is this person that exists in some universe that I've never been a part of, a VA inspector. I've seen a lot of people post that VA inspections are really difficult. They're very strict. The reality is a home inspection is separate from a loan program, y'all. So therefore, get your home inspection for health and safety. But as lenders, we don't get that home inspection. There's no VA inspector that comes to the house. Are there things on an appraisal that the VA appraiser may flag? Yes, let's talk about a few of those things. As an example, cracked, broken windows. Well, guess what? An appraiser doing a conventional loan could also do that. It comes down to health and safety, and all agencies are concerned about health and safety. CO2 detectors, this is another one. That's not a mortgage thing. That is a law because people have died in rental homes, vacation rentals, their own homes because of CO2. And so that is a law. Peeling paint for homes built before 1978. Yes, this would come up as an issue. Again, the mortgage industry didn't create it. They want healthy and safe homes. The EPA created lead-based paint. So any home built before 1978, that lead-based paint is something that has to be dealt with. So talk to your lender. As an agent, make sure you are talking to the lender. You see the house. If you're listing a house, ask your lender, hey, I'm about to list this house. These are the things. Will this be a problem for VA? And if you see a home and you're going to buy a house that's $1 million and VA is not offered as a loan option, that listing agent just doesn't know. Your agent should know, or your lender should know, to bring it up to those agents so that you can take advantage of those lack of loan limits to put less down and have an amazing rate on a VA with a jumbo loan amount. Okay, let's talk about some little known facts. This stuff is fun. Well, we know you don't have to be a first-time home buyer. I've already touched on that. We touched on that. There are not loan limits. So yes, you could borrow north of $1 million and not put any money down. If you're comfortable with that, qualify for that, use that money elsewhere. You will see interest rates that are absurdly low by comparison to, say, what a jumbo is. And the fact that you don't have to put 20% down to do that VA on that jumbo amount is an amazing tool to grow your wealth in different verticals. Here's one that's really cool that is not known by a lot of people, even people in this industry and on the real estate industry as well. The seller can contribute towards debts that need to be paid off. This is wild. So as an example, let's say you had a car with a $450 payment, and let's say there's $20,000 left and you're buying a $600,000 property. Ask your lender, because you could write it in that the seller will pay that car off. Let's say you cover the closing costs. That actually can be separate and done as well. So make sure you're aware of this little known secret about VA loans, because let's think about it. 20,000 more financed, 120 a month in payment. Getting rid of a 450 a month car payment with the same amount of concession from a seller. I'm going to be honest with you. I'm going to take the car paid off because my cash flow is just enriched over having them pay towards other things like, say, buying down the rate a quarter of 1%, etc. So I did talk about the funding fee. That 10% disability means that there is no funding fee. And this is something that's not known, may not be known. If you get a VA loan and you have a claim in process, not approved, and then you close and the claim is approved after the fact. I had this happen with a veteran, and we helped him get his funding fee refunded to him that was financed in his loan amount. So it's a very cool thing, something you need to be aware of, especially those that are seeking disability claims or have them in process when they close on a VA loan. That is certainly something to be aware of. Now we're going to transition. We're going to talk about that real life comparison, the $650,000 home. Okay. Just to give you an idea, I did a quick scrub on this. Don't have all of the visuals for you, about 0.5% lower than a conventional loan the VA was. Okay. There's no PMI, 5% down on that conventional. If you have a great credit score, it's about $100 a month of PMI. So we know that the combination of the lower rate and the no PMI equals $260 a month less for that VA loan. Now, hear me out. You could take that $260 a month, apply it as additional principal every month, make the same payment as if you had a conventional loan, and you're going to pay off the house in 5 years less time, 25 years, and you're going to save $185,000 in savings and interest. You may say, Ray, I'm not going to own the house 25 years. I'm not going to pay it off. Cool. Okay. Well, what if you took the $32,500 and you ended up putting it into the down payment, right? So apples to apples, you're going to have a lower funding fee, and then you're going to have a lower payment as well. So keep in mind, have your lender talk to you about the difference of FHA, conventional, VA, and what's going to be best for you. If you're told you have to get a conventional loan for the seller to accept your offer, ask more questions. Ask why that is the case, because a good lender can talk to the listing agent. One of the things that I like to talk to my agents about when we're working with a veteran and they submit an offer, that listing agent has concerns. We're going to fill the questions so that the veteran has the best chance to get their VA loan. Any seller in their right mind, once they hear it's a VA loan, should not be concerned about the credit worthiness or that a veteran could back out on the appraisal, etc. The housing market has changed, guys. We all know what's going on with interest rates and inflation. If you are going to be selling your house, you really want to think about a veteran and a VA loan. So I'm going to talk about one last thing real quick, which is that VA loans are assumable. I have a video on assumptions. It's certainly something you want to check out that may or may not be right for you, but you can assume a loan that's a veteran's loan. Now, veterans, hear me out, because if a non-veteran assumes your VA loan, your entitlement is not released until they pay off that VA loan in the future. And if you don't get a release of liability, your entitlement will be gone if they have foreclosure permanently. So tread lightly when thinking about allowing someone to assume your loan. But if you're a veteran and someone is PCSing out and they have a VA and you can cover the gap for the amount of the value versus the loan and assume a 2.75, a 3.5, think seriously about it. So if you want to maximize your VA benefits, check out my other videos on house hacking, VA loans, closing costs, other loan programs, etc. If you want to see how this applies to you and see how your VA benefits may work in a pre-approval, schedule a call with me, calendly.com/mortgage maestro. Links to other videos are below. And if you have questions, post them in the thread, even if it's you're not sure about something specific to your situation. Add comments and I'll make sure to get back to you with the answers to those. Make sure to watch the next video coming up. We're going to be posting some really cool content in an authentic format to help you build wealth through real estate. Talk to you soon.